Speak to you later.
Thank you very much. Okay, guys, to kick off with, thank you very much, everyone, for joining the webinar today, especially in these uncertain times. Today, I'm going to be launching our newest project in Berlin, Handjery, as well as giving a brief overview to the German market and why we are so bullish. Now, first of all, a quick introduction on who we are. The Brinke Group are the largest real estate developers in Germany. We have revenues of just shy of €1 billion per year and development activity spanning not only within Germany itself, but also the Netherlands, Spain, Greece, and Portugal. Whilst the residential development sector makes up the majority of our development activities, everyone, can you just make sure to mute your microphones? There's a little bit of background noise. Okay, I'll just carry on. So in terms of who we are, as I said again, as developers, the Brinke Group are the largest developers in Germany. And we're present not only in the residential sector, but also office, healthcare, retail, logistics, hotel, you name it, we've been involved in it at some point in our 115-year-old history. So the company differs a little bit from other larger developers in Europe in that it's a family-owned enterprise, and now you've got the fourth generation of the family in charge of the company. Now, why Brinke has been so successful is that it's been able to achieve incredibly successful economies of scale by managing every different part of the development process. So that means that the group itself has a lot of companies underneath it for their raw materials, for their development department, for their construction workers and contractors. Everything is maintained within the group, which enables it to achieve incredible economies of scale. Now, that goes as well for the sales and the distribution company. So that arm of the Brinke Group is Volsung, and it is responsible for finding distribution partners such as Holben to sell the individual retail units. Now, more importantly than that, Volsung is also there to guide the investors through the entire acquisition process. So that's everything from reservation all the way up until final tenancy of the asset. So we would be responsible for introducing clients to solicitors, to people to assist with the mortgages, and of course, finally, lettings and management at the end once the product is completed. It's also worth noting that all new build apartments in Germany have warranty on them for 5 years post-completion. That's on the structural warranty as well as everything that's handed over inside the apartment itself. So even beyond completion, Volsung would be there to help and assist the clients where necessary. Now, just in terms of a few developments that we've completed in the past, on the top left there, you've got the Maximilian Center in Bonn that finished last year. We sold that to a pension fund for €112 million. On the top right, that was a government mandated contract for the GIZ headquarters for international development in Germany, also in Bonn. So a complete office building with a contract worth €165 million. And on the bottom two, you see some standard run-of-the-mill residential projects that we've developed and completed last year. Now, why specifically we are so bullish on Berlin and Germany as a whole and have a very, very strong pipeline for the future. Now, I'd say probably about 80% of our development activities themselves are within Germany, and we have a huge focus on Berlin and are very bullish on that market. And probably the key reason behind that is the fact that Berlin still remains a phenomenally undervalued city within Germany itself, with a price per square meter for its real estate being lower than the likes of Munich, Frankfurt, and Düsseldorf, but also with European counterparts. So if you compare it to the likes of London and Paris, you're still working at a substantial lower price per square meter. And what that's done is attracted larger institutional investors into the city. So in the past 5 years, PwC and the Urban Land Institute come out with a survey where Berlin has been ranked #1 or #2 over those 5 years as the best investment prospects out of any city in Europe. And that survey was created to speak to 500 of the largest institutional investors and ask them where they plan on investing over the coming year. And obviously, as a result of that, the investment activities and the volumes of investment into Berlin have increased dramatically over the past 5 years. Now, in terms of why people are investing, or why larger institutional players are investing into the city, it all ultimately comes down to the supply and demand metrics. And the population growth in Berlin has been staggering over the past 10 years. We've seen the population increase from 3.3 to 3.7 million people over the past decade. And that 400,000 population increase has had a tremendous effect on the demand for property in the city. So 10 years ago, the residential vacancy rate stood at 5%. And in that time, in the past 10 years, Berlin has only managed to deliver 65,000 apartments to the market. So what that's done is compress the vacancy rate a huge amount so that now it's only 1.1%. You turn that on its head and you've got a 98.9% take-up rate. So in reality, we find whenever we complete an apartment building, we've usually got a queue of tenants looking to rent in that building, just because it is extremely difficult nowadays for anyone, or any Berliners especially, to find an apartment to rent. Now, why have so many people been moving to the city? So as I touched on before, we've seen an increase in population of 40,000 people per annum over the past 10 years. And Berlin, probably out of any city in Europe, has seen probably one of the most dramatic turnarounds. And that's really highlighted well by its fall in the unemployment rate. 15 years ago, the unemployment rate in Berlin was 19%. So 1 out of every 5 people were unemployed in Germany's capital city. As of the end of last year, that stands at 7.8%. And in the past 10 years, they've added over 390,000 jobs to the economy. And over half of those are in the digital and tech sectors. So Berlin, in order to differentiate itself from the likes of Frankfurt, who have their finance hub, Munich, which is well known with the multinational corporations, Berlin has put a huge emphasis on its tech sector, which employs now 1 out of every 7 people. It's also got a phenomenally strong, thriving startup sector, and seen a huge amount of venture capital pour into companies that are based out of Berlin. Some of the major success stories today, the likes of Delivery Hero. If you've ever used a delivery app, Berlin was the pioneer behind all of those applications. If you've used any of their brands worldwide, the likes of SoundCloud, Zalando, which is one of the largest e-commerce fashion retailers in Europe, N26, all major success stories stemming out of Berlin. Now, in terms of infrastructure development, there's one very key thing that Berlin is missing to become a truly global powerhouse, especially in the world of business, and that is an international airport. Today, if you want to travel from any of the business hubs worldwide, be it Dubai, New York, Singapore, Hong Kong, you aren't able to fly directly to Berlin. Now, whilst it does have 2 airports, Tegel and Schöneberg, there is no truly international airport at the moment. That's all set to change in October 2020, which has been confirmed once again as the completion date for the Berlin-Brandenburg airport. And we are very, very confident that they will stick to that completion date now, now that you can actually book flights out of the new airport. So on November 8th, the first flight will be flying out with Lufthansa. And this airport, up until 2030, will be serving 55 million people, which will have a huge impact for the city itself, but also for property prices going forward. Now that wraps up pretty much the fundamentals of why we are very, very bullish on the Berlin market itself. I thought I'd touch a little bit on some things that have been featuring in the news lately. Rent controls are something that are prevalent throughout Germany, and these are applicable on any apartments built prior to 2014. Now, it's very, very important to note that new builds, such as the project that we're launching today, are not liable to any forms of rent control. That being said, Berlin have taken the step for controlling rents 1 step further. And for any apartments now, even if they are refurbished, there will be controls placed on them. So previously speaking, and also in other cities, developers were able to refurbish old apartments in order to charge rents comparable to new build. And that is no longer the case in Berlin. So any apartments built now prior to 2014 will have controls, but anything after 2014 is completely control-free. Now, in terms of what we're going through at the moment in terms of COVID-19, I thought it would be great to prepare a slide and just explain a little bit about why and what Germany have done in order to combat and manage the fallout, especially in terms of business and real estate related. Now, Germany has a fiscal package that equates to around 10% of its total GDP, and that's 750 billion euro. And in essence, that package is designed to keep companies afloat and keep people employed. So those funds are being allocated not only to provide unlimited lending for companies, also to take equity stakes in businesses. All businesses in Germany that have been affected in some way by the coronavirus crisis have had 15,000 euro injected free of charge for all those businesses. However, I think one of the most important policies that the government have implemented recently is that if any employees have been furloughed or are working part-time and only earning part of their wages, the government will subsidize those wages by 60% or 67% if those people have children. So this means that people can still carry on. Companies don't have to lay off employees and then rehire them more expensive due to administration costs later on. And this was a policy that was extremely popular over the global financial crisis when it was implemented and accredited with saving 500,000 jobs. So this policy in particular in Berlin saw that between 2008 and 2009, the unemployment rate only increased by 0.2%. And Germany credits a lot of that to this policy. Now, on top of that, there's the option to defer tax for small and large companies alike, which should aid a lot of firms in the short term. Now, in terms of why we feel that, especially for foreign investors and people that are looking to buy real estate globally, be it in the UK, US, Australia, Canada, why Germany has two unique advantages I'm going to take you through now. Number one, in terms of the financing and mortgage options, I'm happy to say for the past 5 years since we've been operating this business, we have yet to find a client we weren't able to get a mortgage for that was 70% loan to value with an interest rate of at the highest 2.9%. So this option that we have is with the pension fund in Germany, and they're willing to lend 70% on all of our projects. So before we take any development out to market, we will provide all of the information on the certain project to this pension fund, who will then come back and make sure that none of those apartments in our project are downvalued at all. So the normal lending amount is always 70%, and you'll be able to achieve that. You and your clients will be able to achieve that for all apartments in the upcoming project. Now, on top of that, we have a new option with the bank that's confirmed for all of our developments, and that is a lending rate of only 1.25% interest rate for a 10-year fix. We've already had cases confirmed with clients. They've even been able to achieve as low as 1.1%. Now, there are some caveats to that lending option. First of all, the client would have to be willing to go to Germany in person to sign. That's not the case with the pension fund. They'd also have to buy a property that's at least 300,000 euro and have a good salary. If anyone has any further questions on that lending option, please feel free to contact me after the presentation. Now, the second key reason why we feel Germany especially is such an attractive market compared to the alternatives is the fact that whilst the acquisition costs in Berlin are slightly higher than usual at around 9%, when it comes to offloading and selling that property, if you hold it for 10 years, there is no capital gains tax charged on the property. Of course, that's tax residency dependent, but in the vast majority of locations that we have clients, it tends to be the case that there's zero capital gains tax they need to pay. So if they're located in Germany, they would also have no capital gains tax if they were to hold the property for 10 years. Now, on top of that, there will be no exit costs, because in Berlin, all costs, be it the stamp duty, notary fees, solicitor fees, or even the agency fee, is all covered by the buyer. So when it comes to exiting, there's no exit costs whatsoever. Now, onto the project development itself. Handjery is located in the heart of West Berlin, and the project itself encompasses 64 units. We have everything from studios to 2 bedrooms available. In terms of the allocation for Holborn, those are predominantly the studios and 1-beds. We find this location of Berlin is especially popular with local owner-occupiers, so the larger units will be held for them. That being said, if anyone has any interest in the larger units, we can make sure those become available to you also. In terms of the average price per square meter, here we're looking at a very, very competitive 6,000 euro, and the average price for any 1-bedrooms will be 300,000 euro. Gross yields on average will be 4%, obviously with the studios being slightly higher at just over 4.5%. Now, these are a few pictures of the internals. And onto the location itself. So this is a map of what I would consider to be central Berlin. There's 2 main reasons why we as developers chose this plot to develop as opposed to anywhere else in Berlin. And number one is the fact that the transportation links for this project are exceptional. You're only 2 minutes walk away from both the underground and overground train networks, which means that you can be pretty much anywhere in Berlin within 20 minutes time. Most importantly, though, the premier street in Berlin is known as the Kurfürstendamm, and that will be comparable to London's Oxford Street or the Champs-Élysées in Paris. So this is a street where you're going to see a lot of the high-earning, low-headcount firms, be it private equity firms, wealth management companies, solicitors, real estate developers such as ourselves. We're also located just off the Kudamm. They will be along that street. Now, in addition to that, you've also got your five-star hotels, flagship stores such as Tesla, Prada, and Gucci are also along that street. So the fact that we're only 9 minutes away from the Kurfürstendamm is a big, big positive for our development. And if you're looking at buying apartments anywhere in the vicinity there, your starting price per square meter is going to be at least 10,000 euro. So at 6,000 euro, we are phenomenally competitive in that regard. Now, another key employment node that is a short way away from our site is the recently opened Deutsche Bank Global Risk Management offices. So they employ around 2,000 people out of those offices and were moved over after Brexit was announced. So it's entirely conceivable that some renters would be living in our project and be working at Deutsche Bank there. On top of that, Potsdamer Platz is the home to over 480 companies in Berlin. It's probably one of the largest employment nodes to date in Berlin, and again, only 16 minutes away. Now, the biggest regeneration project that's underway in Berlin at the moment is the Europacity, and that's all centered around Berlin's Central Station, which is actually the busiest station in the whole of Europe and serves 350,000 passengers on a daily basis. You can get all the way from the heart of West Berlin to Europacity, which is considered the center of Berlin, in only 19 minutes time. And you've got a couple large multinationals such as PwC, KPMG, already set up there with 1,000 and 2,000 employees between them. Now, Alexanderplatz, whilst not a major employment node, is probably one of the biggest tourist sites in Germany, featuring the Alexander TV Tower, and that is reachable in 26 minutes. Now, in terms of universities nearby, we're also 10 minutes walk away from the Berlin University for Economics and Law. That's home to 11,000 students, and the largest university in Berlin is the TU Berlin, which is the Technical Institute of Berlin, and that houses over 34,000 students. So we also have large universities nearby, which is obviously very, very key when it comes to Berlin, because, again, it is a very, very young city. It's attracting a lot of young talent. And having those two universities very close by gives you access to an entirely new pool of tenants also. Now, finally, two other landmarks that are 15 minutes away by underground, the Tiergarten and the old decommissioned airport, Tempelhof Feld, are also easily accessible and very big hotspots for local Berliners over the weekend. Now, I mentioned there were two reasons before why we thought this development itself was so exceptional. And the first was the transportation links. Now, the second was the regeneration that is happening in this area. Now, if you see this whole stretch here, including these two CGIs, this whole area encompasses called the Friedenau Heights, or Friedenau Höhe in German. And it begins with our building here. So that is the 62 unit development Handjery, which is being developed by ourselves, Brinke. And next door to that, we're also building this development here. Now that's been sold already to a government asset management company and will be only PRS apartments. So you can't buy any units in that development. Finally, the large section here in gray is the only part of this whole regeneration zone that's not being developed by ourselves. And that encompasses 60,000 square meters of mixed-use development and will be the largest mixed-use development in Berlin. 20,000 square meters is allocated purely to gastronomy and office and retail. We've got around 7,000 square meters of space that's allocated for kindergartens, parks. There'll be a cycling path that will connect the whole development from the very beginning here at our development all the way to the end there of Friedenau Heights. In terms of the residential units in the grey section here, those are all going to be PRS once again. So in terms of purchasing apartments in Friedenau Heights, we're quite unique in the fact that we have the only apartments here that are available for sale. Now, I just wanted to take you through the average payment plan for one of our apartments here, and in terms of the process. So if you do have any prospects for Handjery, it begins with first a €3,000 reservation fee that is paid to Volsung. That is fully refunded upon exchange or notarization of the apartment. We have, after 6 to 8 weeks, usually the reservation process will take 6 to 8 weeks, and that consists of us guiding the client through the solicitors and then filling out a power of attorney form, which is all completely hands-off for the client and handled by the solicitors. So the first 9% acquisition costs will be due on notarization. And for a average €300,000 one-bed apartment, that will come to €27,000. At that point, we would refund the reservation fee and the first construction milestone. And in Germany, all payments follow 7 construction milestones. So we're only allowed to request payment from clients upon completion for each milestone of works. And the first 30% for that will be due at the end of August. So in terms of the equity payment or total equity payment required, that will be around €107,000 for an average one-bedroom apartment at Handjery, provided you're taking a 70% loan-to-value mortgage, be it through our local bank in Berlin or the pension fund. Now, that pretty much wraps up the webinar today. In case anyone has any questions, please feel free to add me on Zoom, or I also have my email readily available here and phone number for any further questions, or if anyone has any questions on the market or development itself.